Hello, I'm Paul here. Today I'm going to be going over the linear strategy for Forex. This is going to be the last time I really talk about the linear strategy. I find that this is one of the most effective strategy. I learned it from a video on YouTube from another YouTuber, and I plugged this formula in, and it works really well. You know, it depends on what asset you want to use it for. But what I recommend doing for the linear strategy if you want to use it for Forex, and that's what I'm covering today, what I would do is I would open up a demo account, and I would practice this formula with a demo account to see how well you do before you start putting in for real money. But practice with a demo account with this strategy and see how well it works for you. These videos are for entertainment purposes only. They're not any profit or loss I'm not responsible for. But anyway, I kind of want to walk you through the linear strategy one more time, but this time we're going to be looking at how it works for doing Forex. So we're going to be looking at a couple pairs. We'll look at Japan yen, all the popular ones. British pound, Canadian. We'll look at a couple. We'll plug the formula in, and we'll look at a higher time frame, maybe a smaller time frame, see what works the best for this strategy. Anyway, let me show you how to set up this formula. If you guys have not seen the last couple videos I have made about it, definitely check those videos out. I do have this strategy also for crypto, stocks, and gold, so check those videos out if you want to use this strategy for that. But other than that, let me show you how to plug in this formula and you'd be able to use it for Forex. I added an extra indicator for the strategy, so the previous videos I didn't add these indicators, so if you want, just go back and look at those videos, and you just add this extra one if you want. I just find it helps a lot. But anyway, you're going to need a couple. We don't really need Algo Pro, but we're going to need a couple indicators here. The first thing you want to do is you want to set up your linear lines. So the first thing you want to do is you want to hide your candles. So we're looking at the Japan yen right now, but the first thing you want to do is you want to hide your regular candles. So you want to go and do that. And the next thing you want to go is to your linear regression candles. So real quickly, you go to your linear regression candles. It's this one right here. Okay, so we got linear regression candles, and basically you gotta change. Basically, you want to keep the candles here. You want to keep. You can change the colors if you want. But I frequently like changing the colors, but to keep as default. And you have to make sure you have your plot line. Now, I either have my plot line as white or yellow, and let's have it a little bit thick. Make it yellow, it just stands out. So have it like that. Now you have your, let me just hide the other linear candles. So now you have your linear candles. So the whole goal of this strategy, and the goal of this strategy here with the linear candles is to wait for movements of the candle going above the linear line or below the linear line. And then the other indicators here I have that help out is the OBV MACD. So let me remove one of the... okay, let me remove... And the next thing you want to get is the MACD, the OBV MACD. The OBV MACD right there. So it's going to look like the bottom one as default. So what I do is I change it up. The first one is your zero line. So I change it to a white. Make it a little bit thick. And then you got your other plot line here. You have to change the blue to a green, which is that's your going up movements. And you want to move the opacity all the way up. Then you want your red here. Make sure it's a bright red. And move your opacity all the way up. So you want to change. I knock down the thickness. And then it just looks like this. So it's set up. So anyway, this is optional, but I also have the shaft. It's the shaft. It's the STC. It's called the shaft trend indicator. And basically what I do in this setting is I usually keep everything except the upper here. I'll have it white. And the lower I'll have white as well. But that's just personal preference. And then I check off the middle zone because I don't need it. So I'm not really going into the this optional indicator here. I have it there for a double confirmation for me. But really what you guys to focus on this strategy is the linear line and the MACD indicator. So using FOREX, what you want to do is you want to focus on the moments when the candles are either above the linear line or below the linear line. And I also have consolidation zone on here as well. That's another optional indicator. But it helps find the moments when things are consolidating. You don't want to do any trades when it's consolidating. Now, as you can see right here with the Japan yen, the candles have gone below the linear line, which means it tells me that it's in a downtrend here. Basically, what you want to do in this strategy is you want to see if the candle's above the linear line, you want to get in when the candle is right above the linear line. And when it's going down, you want to focus on it being below the linear line. You also want to look at your MACD to find the good moments to get in. So another move that you could do is you want to focus on, you want to see when the candles are going up. It has to be above the linear line, and then the MACD also has to be above the white line, which is the 0 line. So let's just look at a couple moments to see how well this strategy actually works. If we follow these rules, so the candle we're uptrend. Now we're doing this on the hour here. I personally do it on the hour. You guys can try smaller time frames if you want, but I find the hour will give you the best results. So we first want to wait for the candle to be above the linear line, and then we want to see that the line on the MACD is also above the white line, which is the 0 line. So if we follow these rules, right here we see the candles above the linear line on the Japan yen, and we also see it above the 0 line with the MACD. So if we wrote this out from here to here, and the rule of this strategy is to get out when it starts touching the linear line. So that's right about here. So this is 182 pips, this move right here. So let's go back and look at a couple other examples. So right here we see a red candle below the linear line. So what we want to do, if we want to place, now in this moment we see that it is consolidating. So this probably wouldn't be a good time to do a move because it's consolidating. You can see that right here. So if you did want to do this trade though, but I wouldn't do it because it is consolidating. But anyway, you see it below the linear line, and you also see it on the MACD. So if you want to do that trade, you can, but you probably won't make a lot. This is only, there's only 90 pips. So it's consolidating for a reason. And then right here, you see the green candle going above the linear line. You see it, it's not in consolidation, and you see it, the green line above the MACD right here. So if you come in right here and you rode this out for a couple hours, this is 123 pips. Now you'll see a big consolidation zone there, so you want to stay away from that. So up here at the top, we'll look a couple more for the Japan yen. But right here you see the red candle below the linear line. But right here at the moment, if you look at your MACD, you'll see that it is above the linear line. It hasn't crossed yet. If you want to take your move, it'll be right about here. Right here is where you take your move. So if you did your move right where it crosses on the MACD, which is right about here, and you rode this out, You're looking at 334 pips. So I'm going to do 2 more here, and then we'll look at a different Forex pair. So we see the green line above the linear line right about here. And then we also see that happening on the MACD. So if we rode this out from here to here until it crosses right about here, this is a 782 pip move. Okay, so let's look at this last one right here. We see the red candle below the linear line. We also see that on the MACD, so this would be a good example of getting in. We ride it down until we're in profit or until the green candle goes back in through the linear line, which is right about here. This is a 1,162 pip move. So let's go ahead and look at a couple more Forex pairs and see how well this works. Let's do the British pound, see if it works well for that one. Okay. So right here we see the red candle going down the linear line. We also see that on the MACD, so that would be a good entry point right about here. If you rode this out, that's about 250 pips. And right now at this moment, we see the candle is above the linear line, so this would be a good moment to get in to see where it goes from here. But you can practice here on a demo account to see how well it does. Okay, so right here would have been a good trade because right about here, you see it going above the linear line right about here. So you enter your trade right about, well, it is in a consolidation zone, so I would get out right about here would be it. And you can see that it's also above the linear line. This one is a 329 pip move. Let's do one more with the British pound. Consolidation zone right there. And what we want to do is we want to look for it crossing down on the MACD for our entry point. Now, every time you make an entry point, what I personally look for is it has to be crossing in that direction with the linear line, either above the linear line for bullish or below the linear line for bearish. And then it has to be crossing down on the MACD. I mean, it has to cross down at that moment. It can't be like way down here when it's happening, because you could be too late at that point. So look for it to cross on the MACD as well as look for that on the linear line. So let's look at this move right here. It crosses down here on the linear line. We see that happening on the MACD. If you rode this entire thing out here to here, we got a 1,431 pip move. So I'm going to look at one more Forex pair. Let's look at Canadian. Let's look at the Canadian real quick. So anyway, we see right here that the green candle prints above the linear line. We also see that happening with the MACD, so this is a good point to get in. So right about here, you would enter, and you exit when it's touching the linear line, which is a good moment right now. This is almost a 200 pip move. So right here, we see a moment where it crosses down on the linear line. So this would be a moment to get in right about here. This looks very brief. So you write it out here and you wait till it crosses back into the linear line. So this is only a 128 pip move. This is a consolidation zone, another consolidation zone. And let's see right here. We want to see where it starts. So right here we see it crossing up with the linear line, and we want to get in probably right here about here, because this was where it crosses on the MACD. So if we rode this out from right about here to where it touches the linear line, what's right about here, this is a 372 pip move. So you can see that this strategy works really well with Forex. You can really use this for whatever Forex pair you want. This will work for the main Forex pairs, but it will also work for all the exotic, different kind of combinations you get with the Forex pairs. You don't necessarily have to trade this with the USD. Let's just randomly here look at a different Forex pair. Now, let me just real quickly look at a random Forex exotic here. Let's just punch in a different one that doesn't have anything to do with the USD. Let's just do one that has Japan. Let's see. Here, no, we don't want to do Hong Kong. US. We don't want to do any US. Let's not do, let's see, Forex crosses. Here we go. Here's a good one, the Forex crosses. So, here we got the British pound with the Australian. Let's just see if we can find that one. It'll be a little bonus one. So, we got the British pound, GBP, with GBP with Japan. GBP with Japan. So, you don't necessarily have to do the USD. I do it because I'm in the United States, but you could literally use this strategy with all the Forex pairs, the exotic ones, and all different kinds of crosses. So, real quickly, we're going to look at British pound with Japan. Well, this is kind of a bonus here. See how well that moves. So, what we want to look for, candle goes above the linear line right here, and you can see that happening right about here. So we came in right about here, ride this out. This is a 720 pip move in 9 hours. So it depends on what exotic Forex pair you want to do, but you have to do some research and look into it, but you could probably find some that have a lot of volume, you know, ones that don't have to do with the US. But, you know, you can do all different kind of combinations. If you open up the brokerage account, which is the one I use for my trades, for my Forex trades, you could go through this entire list here. I'm not going to go through all these. But, you know, British pound with Australian, British pound with Canadian, British pound with Japan, British pound with New Zealand, a whole bunch of different combinations here. You could definitely go through this list and see how they move and, you know, plug this in the charts and see how well this formula actually works. But like with anything here, with Forex, you can usually open up a demo account. So what I would do is I would practice with a demo account first thing. Practice this strategy first with the demo account. Get good at it. Get good at trading with it. And then see how well you do. So that is the linear strategy. It works for all kinds of assets. Now, the only thing I didn't really touch on is the use of doing this with like oil and commodities, which technically that would probably fall under the stock category, but it would work the same if you did commodities as well. But this strategy works well for crypto, works well for stocks, it works well for Forex and gold. So it's it's the strategy that I use for my trades. The couple things that I check off. You know, I check the linear line. I see if the candle is either above or below the linear line, and then I look at the MACD to see. I see the MACD if it's doing the same thing. So anyway, I find that this strategy is really effective in whatever I choose to trade. If you guys want to use this strategy, I'm not responsible for any profit or loss. These videos are for entertainment purposes only. So anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.